bank transfer day happened on November 5th. More and more people are still transferring their money from big banks to credit unions, which is awesome. And Wells Fargo is not worried about that because they're creating a brand new bank that caters to the super wealthy, people who have $50 million or more.
Good for them, because those poor guys, they didn't know where to bank before. Like, where do I put the money on? God, I can't catch a break. So I'm glad that they're going to be finally catered to.
They are going to be catered to, absolutely. Well, they've been catered to from the very beginning. But this is going to be an exclusive bank for them. They are going to get help in terms of like investing and insurance and all these different things that will help them increase the amount of money that they have.
So a couple of interesting twists here. First of all, it turns out that there are only 10,000 households in the U.S. who have over $50 million, okay? Which is an interesting number, and combined they have over $1 trillion. Okay, just those 10,000 households. But the reason they went in this direction is that Wells Fargo realizes it's getting tougher to screw the average customer, and they don't have that much money left anymore, right? The average customer. So like, God, the rich have all the money, so what are we wasting our time with the other 99% for? And you got to give credit to the Obama administration here a little bit. I've thought their reforms have been fairly weak, but apparently at least some of the reforms in terms of the fees that are being paid, et cetera, have been fairly effective. So the banks are like, oh, we can't, rob those guys.
Suck the money out of the middle and working class anymore. We got to find another way to make.
We got to find another target, which then made me think, oh, okay. So if they're going after the very rich, they're looking to make money off of them. It's only a matter of time before before the bankers look to screw the very rich.
Right.
And then we're having a fun fight.
Right. That is an interesting fight. But also it kind of tells you, and maybe I'm being too pessimistic here, tell me what you think, but it kind of shows you that the big banks don't really give a crap about you transferring your money to a credit union, right? Like, why would they be so concerned about that when, think about this, they have people with $50 million or more investing in their banks.
No, I'm not sure I agree with you on that, because here's why. Like, they need all the mass of those depositors to serve as the base for their betting, okay? Because if they have, let's say, all of that equals $1 billion, just to make up a round number, then they can make $10 billion or $20 billion worth of bets, right? So if they start losing that base, then they do have to bring down their bets a little bit. They don't like that. But that's part of the reason that they're going after the very rich. They're like, we got to make it up quick, right? So who has all the money? Those 10,000 households. So let's go get those guys to put their money in us. And in fact, they might give them a great deal. I'm not saying that they're definitely going to get screwed or anything like that. They might give them a great deal to get that money in so they could then turn around and leverage it and bet with it in securities.
Okay.
So, and that's probably a large part of the reason that they're doing this.
Yeah, and also you got to keep in mind that a lot of the banks will treat their clients poorly, especially if they know the client is about to take the money out of the bank. So, you hear stories about Bank of America not allowing their customers to, transfer their money out of the bank and this and that. So I guess they are a little, freaked out by bank transfer day and all these people switching over their money. But I will tell you, and I think it's great that people are switching their money to credit unions. I did it. I think it's great. It's awesome. At the same time, there's so many like little perks that you get with the big banks. And I think that people are scared to switch because they think they're going to lose those perks. Like, for instance, the credit union I joined, I didn't do enough research, but the credit union I joined doesn't have like online banking, right? Or they don't have online banking on your phone. I love to do online banking on my phone, but they don't have that yet. So that's a little bit of an inconvenience. Right. And then also, debit card fees or whatever, like if you're going to take money out of a regular ATM, they're going to charge you a fee and then the ATM charges you a fee. So there's a bunch of little things, but you do your research, you'll find the right credit union. Don't get me wrong.
Yeah. No, it's not easy. Otherwise, everybody do it.
Yeah.
Okay. So anyway, but look, to give you a sense of how much money the banks make on the securities, and the securities are a rough way of saying the bets that they're making, right, on financial products, right? Over the last 2.5 years, the top banks have made $83 billion, okay? You don't make $83 billion by betting $83 billion. You do it by betting, less than that, and you multiply your profit by doing leverage, okay? In order to make $83 billion, you're actually betting more than $83 billion. So that gives you a sense of part of this scope of the problem. And then to give you a sense of whether Obama's been killing them or not, in the 8 years of Bush, they made $77 billion. So
They've made more under Obama.
They've made more under Obama in 2.5 years than they have under Bush in 8 years. Okay, so Obama's doing a good job, to be fair, on some of the consumer reform at the consumer level, but at the systemic level, the one that's causing the real risk and the real profit for the banks, he hasn't laid a glove on them. They're doing much, much better, taking the same, if not more risk than ever before.